VMware shareholders will elect to receive $142.50 in cash for each VMware share. And the difference between that right now is about 16%. 15% gain in 3 months. That is incredible. VMware is a cloud computing and virtualization technology company headquartered in Palo Alto, California. VMware was the first commercially successful company to virtualize the x86 architecture and today has a market cap of nearly $50 billion. I personally use VMware to emulate a Linux machine on my laptop, which is extremely useful as a programmer. It is 100% the best option on the market. Now they're focusing on multi-cloud technology. Multi-cloud is basically using multiple different cloud softwares together in one.
The games group, baby. We're all gonna get rich together.
So right now, VMware is trading at almost $120 per share with a PE ratio of 35.96. The earnings per share was 3.32, and the next year is projected to be 7, basically doubling. The next quarter is projected to go down a little bit, 1.92. And I think it's mostly because of the macroeconomic headwinds. The Fed is going to hike the interest rates again in this month. It won't be as much of a hike, probably only 50 basis points, but still it's a hike. It's still going to continue to slow down the economy. So there's no dividend, but it's a growth company. Since it's a software company, you kind of expect the margins to be pretty good, especially because it's an established software company. So the gross margin's 81.5%, the operating margin 16.8%, profit margin 12.4%. Last year they made 1.41 billion, and their current and quick ratio are both around 0.8. Fear and greed right now, CNN survey says it's 57, which is greed, but it is less greed than it was a week ago. It is decreasing, and I think that's mainly because the Fed is expected to increase interest rates by about 50 basis points.
The games group, baby. We're all gonna get rich together.
And you might be wondering, if you ever look at a price chart of VMware, why it spiked up recently. Broadcom announced they want to buy VMware for a price target of around $135 in March of 2023, which is $15 per share higher than it is today. So many people were like, oh, free money. I'll buy VMware. Broadcom is mainly known for buying hardware companies like semiconductor businesses and massively improving their profitability. They do have to make some pretty drastic business changes, so a lot of times they will cut some of the workforce, increase their prices, stuff like that. But Broadcom has responded to this criticism, saying that they do not intend on increasing any of VMware's prices, and they want to basically streamline it so that they can continue to provide a better product with VMware without ever increasing the price. Broadcom also said, and I quote, "Under the terms of the agreement, which has been unanimously approved by the board of directors of both companies, VMware shareholders will elect to receive either $142.50 in cash or 0.252 shares of Broadcom's common stock for each VMware share."
The games group, baby. We're all gonna get rich together.
The fortified forces, in terms of the virtualization thing to emulate a Linux machine, I would say it's low competition, but for the multi-cloud stuff, I would say it's high competition. That is why I actually put a medium competition on this, because I think the different aspects of their business have different levels of competitiveness. A few noteworthy competitors, such as Oracle's VirtualBox, which is basically another virtualizer, but you'll go onto forums, someone will post an error and they'll say, like, the response will be like, this is only true if you're on VMware. If you're on VirtualBox, they can't help you. It is just widely considered the best. Another competitor that I know of is called Linode, and they basically are a website where you can run a Linux machine virtually, like, through a website. So you don't have to actually download the actual disk image and a virtualizer. The downside being it does cost money. So in my personal opinion, I think they're serving two different kind of markets. It is a competitor, but I don't think that they're direct competitors. I think there's a low threat of entrance. I don't really foresee companies trying to make a new Linux emulator. I think there's a pretty high startup cost. Those things take a lot of code. I would also say low supplier power, because with any software company, they don't have very many expenses. They write code, they put it on the cloud, they can pay for servers, that kind of thing. It's not this huge threat of like suppliers hiking their prices. And also just in general, the server farm kind of area is super competitive right now. I would say actually a high buyer power, because multi-cloud is such a competitive space that programmers are like, we're willing to go through a headache to save some money. It's kind of like our area of expertise is like troubleshooting computers. They don't really have this huge amount of leverage because they make multi-clouding so much easier. It's this great, awesome thing, but do their buyers care that much to pay a premium? I don't think so. So I think the buyers can kind of anchor that price down a little bit. And then I think there's a medium threat of substitutes, because with their virtualization thing, it's just emulating a Linux thing. So it's something like They're not doing anything crazy creative like themselves. It's not easy to copy that, but it's like not super creative. With the multi-cloud, it's like it's definitely difficult to write the software to substitute it. It's like with an electric car. Like for example, BYD, we did an analysis of them a couple weeks ago. They make electric cars. It's very hard to substitute an electric car because there's so many different little customizations, that kind of thing.
The Games Group, baby. We're all gonna get rich together.
Broadcom also had a reputation when they acquire a new business for raising the prices, and Broadcom's CEO Hock Tan has been talking to the VMware ecosystem and trying to answer their questions and shared as much information as they're legally allowed to. He hasn't said that he won't ever raise prices. He did make a pretty compelling statement by delivering long-term value to customers and investing in R&D, we can basically offer better products without raising prices. Now, as I mentioned before, VMware has pivoted their business mostly from the virtualization thing into the multi-cloud space. Octan is very well aware of this. They're going to give them all these resources to be able to R&D faster to make the best multi-cloud type of software on the market. This analyst thinks that the way he's talking about it in this article makes me think there's no question in his mind that it's going to go through.
The Games Group, baby. We're all gonna get rich together.
The analysts basically think it's going to go to the 135 price target, roughly, and then get bought out by Broadcom. Based on that thing I saw on the Broadcom website where they said that it was unanimously agreed on 142.50, maybe it'll be 142.50 close in March of this next year. I don't see any like antitrust things getting in the way, but I'm also not like a legal expert. Even if you think there's a terrible chance of Broadcom's acquisition actually going through, it's a great buy in my opinion still because the company is so good. So I actually did buy it. I bought it for about $110 a share. It's at 120 now, and I think in 3 months it'll go up to around 140. What VMware does in multi-cloud is a little bit technical, so I'm not going to get into the exact details, but the gist is they do a great job. That is such a useless statement.